McMahon, and you're in the U.S. GDP webinar. Please take a moment to read the risk disclaimer, which should now be on your screen, and then we'll get started. All right. Alright, so it's been a pretty interesting session so far. We're going to take a look at the dollar index here on the hourly chart. You can see that it's been really moderately obnoxious session to try to be trading the dollar. We broke down, we made new lows, which means we made new highs in the euro, new lows in the dollar yen. And then all of a sudden we had a very strong and dramatic reversal. As the dollar picked up strength, it was a bond move. Treasury yields increased sharply, sending the dollar higher. Dollar yen, after breaking down below this ascending wedge, managed to easily rally 125, 135 pips, break back into the wedge. It's now testing that 618% fib of this most recent decline, so a pretty big level here. It's stalled there for now, and any sort of disappointment on the GDP figure could see the down move resume. We're looking for 2.5% here today to match the most recent print. They don't usually get GDP prints wrong. They come in as expected. But when they do get them wrong, there's usually a very dramatic reaction. So really, anything below 2.5%, we're likely to see the dollar sell off. And I would guess equities rally, but that's less clear lately. And anything above 2.5%, we should see further dollar strength, especially against the yen. Yeah, lots of false breaks. Here's one on Aussie dollar. We broke out of this ascending trend line, headed higher. Then this 200-hour EMA acted as very solid resistance, sending this heading right back lower. Euro dollar isn't quite a false break yet. We did kind of break higher, but then we again sold off pretty hard off 103. Now 129.40 is holding. You can see there is some previous congestion in this area right now that we're sort of sitting above. So the euro dollar has a good base to rally if it wants to rally off this GDP print, but it's not so strong. I wouldn't be surprised to see a sell-off. In addition to the GDP print at 8:30, we also have a bunch of other stuff going on too. We have the weekly unemployment claims for the U.S. Those have been perhaps given an overstated importance of late with the threat of tapering. Everyone's looking at these weekly unemployment claims for clues as to whether or not the employment picture is improving. We also have Canadian current account and Canadian RMPI numbers, which is the raw materials index. Those all come out at 8:30 as well. And then at 10 we have pending home sales, which also actually usually get a somewhat decent reaction, though they have in the past few months. So it's a busy morning, especially this 8:30 block that's coming up in about 9 minutes. You see the dollar starting to fade a little bit here as the euro gets a bid. Not dollar yen though, so let's see. Really just the euro. Euro pound, still trading within this congestion area, still looking for opportunities to maybe get along that pair. But it's gone literally nowhere this entire week. Kiwi CAD, again, another false breakout, higher and then shot much lower. Aussie CAD, yeah, same thing. Let's take a look at ES. So here's E-mini futures on the hourly. Keeping a careful eye on this ascending trend line here. That support is around 1640. That's a nice clean trend line to keep an eye on. Top side not as clear, only 2 touches there, but this seems to be the congestion pattern that we're dealing with here on S&P futures. The low 1640 should open up a good amount of further downside if we can get it. Last night we had another ridiculous sell-off from the Nikkei. Dropped over 5% last night, which dragged most of the Asian markets lower. European markets are higher on the day though, especially the French and Italian markets are up about 1% apiece. So we'll see. Right now, E-mini futures looks to be opening about 0.3% higher, but we'll see what this data does to that. Dollar CAD, another false break. We broke down here out of this wedge and then ripped right back through it without too much of a problem. If we see some dollar strength continuing, 104.25 would be an opportunity perhaps to try to fade dollar CAD, which again, not my favorite play. I've said this before. Of all the dollar pairs, I least want to be short the dollar against the Canadian dollar. So I don't want to sell dollar CAD really. But that would be an opportunity to do so. I'd rather see a pullback to get long dollar CAD at a lower price. Pound dollar holding some moving average support right now. We have the 50 and 100 hour EMA sitting right below market price. We bounced off them earlier this hour, so hopefully those will hold and we'll continue higher on pound dollar. Kiwi dollar, another pretty dramatic false break. Kiwi sold up really hard. Kind of got above the ascending wedge twice actually, and then the last 3 hours we dropped basically 100 pips in the last 3 hours. Now we're testing this range bottom here around 80. We did make a new low, but I'd be watching this area down here very carefully to see exactly how the pair reacts to this recent low. This would be the last sort of gasp opportunity for bulls to put in some sort of more aggressive reversal pattern. Certainly they had an opportunity here that they let slip away. This 200-hour EMA acted as pretty solid resistance this last time around, sending the pair flying lower, which probably means I haven't looked at it in a while, but yeah, we've seen a pretty decent run higher by Aussie Kiwi here in the last day and a half. Nice resistance comes in on Aussie Kiwi at 1.198. Basically from 1980 to 120 is good resistance on Aussie Kiwi. But with that being said, this pair is pretty unclear, and I have no great overwhelming desire to trade it. Another false break, actually, that I was looking at earlier, Euro CAD. We broke above. Let's jump out so you can see exactly what this is. I don't really have a strong feeling about Aussie Kiwi. I mean, we could make it all the way to 123, but that's not really. Yeah, I would be surprised if we made it that far, but we might. I certainly would not really be in a great hurry to buy Aussie Kiwi. 121.42. 121.42 should be good resistance. We also have this 50-day EMA here right around that level, as well as 121.27, and then 122.60 is the 100. Yeah, we have the potential for an aggressive weekly candle higher, but again, it's just not my favorite pair. I just don't like trading Aussie Kiwi. It just usually doesn't go well. So Euro CAD, we spiked higher above this daily congestion pattern. I'm not exactly sure what you would want to call this. Triangle of some sort, I suppose. We spiked higher and then was immediately rocketed back lower, but we've continued higher today. If we can get a daily close out of this congestion pattern, I would be tempted for longs on EuroCAD, but we'll see how we close the day. Certainly, anyone who tried to front run it yesterday did not work out so well. That is a very nasty candle on yesterday. This is dollar Swedish krona. It's a good sort of general indicator of dollar strength. And you can see the past 3 days have been obnoxious. Up, down, down, and up. Really, even the past like 5 days, it's been tough to get a read on this pair, or really the dollar in general. Gold hasn't done much in the last few days. Again, just consolidating. Oil consolidating. Lots of just sideways for the past few days. It's been a pain, really, to trade. Here's dollar yen on the daily, gives you a better idea of this wedge that I was looking at. You can see we did start this breakdown out of it, which could have turned into a very nice short, but we reversed nicely. Now we're back within this wedge. Again, daily close outside of it looks good. This is actually the daily chart, ignore that 4 hour. But if we can get up all the way towards 104, that could be an opportunity to try to short it as well. Just sort of depends on how the pair plays itself out going forward. Certainly it's been very challenging to trade lately with this candle combination of just 1 day of up 130 pips, 1 day of down 130 pips. Now it looks like we're going to have another day of up 130 pips. So been a very tough pair to trade, which means that most of the other yen pairs have been tough to trade as well. Aussie yen, again, up and down. CAD yen is actually kind of interesting here. Could be the start of a head and shoulders. Left head, now we need a right. Below this 50-day EMA here on CAD yen should open up some further downside, maybe down to as far as 94.20, this 100-day EMA. But certainly, like all the other yen pairs, they've been really challenging to trade lately. Alright, so we're about a minute away from the data release. And by a minute, I mean, I think it's probably just out. Yeah. Alright, so slight miss on GDP. 2.4 versus 2.5 expected. And we also had worse than expected jobless claims, which is all dollar bearish. Yeah, so 354,000 is the unemployment claims versus 342 expected. 2.4% GDP versus 2.5% expected. So we're getting a little bit of a dollar sell-off here against the yen. And against the euro. See how equities are handling this. Equity is not really caring right now. Alright, so we're seeing a slight dollar sell-off, but nothing dramatic. Which is a little surprising. I thought we'd see a little bit more of a reaction considering that we had 2 negative prints. For what it's worth, Canadian current account slightly better than expected. Raw material slightly worse than expected. Yeah. Dollar CAD selling off a little bit as well. I just don't know what kind of follow-through we're going to see with any of these moves, is the problem. We don't have anything. I mean, we're pending home sales at 10, which is something, but it hasn't been terrifically important lately. And then that's really it for the week. I mean, we have Canadian news tomorrow. We have Canadian GDP. But in terms of important U.S. news, that was really it. Pending home sales at 10. And we have some small, like, personal spending stuff tomorrow. But I just don't know what kind of follow-through we're going to see on any dollar moves for the rest of the week. I wonder if we're just going to see more sideways consolidation and chop before continuing higher. This is really pretty decent resistance here for the dollar index, which means we could see the euro push a little bit higher. I can look at euro yen. Let's see what we see in euro yen. Alright, let's look at euro yen. What time frame are you looking at, Nick? So this is what I see on euro yen. This isn't a favorite because I feel like this area up here kind of messes with this consolidation a little bit. But I do see the opportunity to get long euro yen if we can break even really just 10 or 15 pips higher and close up there. Yeah. So that's what Nick's looking at as well. Yeah, so I think that is an interesting opportunity. I just don't love that it's just so sideways back here that we have this weird spike higher and this collapse. There is I mean, this is the third touch on the trend line and it's respected it pretty well. So this could be an opportunity to get long euro yen. I'd probably look for an hourly close above 131.90. So about 20 pips higher, and if we can get above there, could be an in-firm move up towards 133.80, which does actually fit with dollar yen breaking back into this wedge here. It does seem like we should at least manage to get another 25 to 30 pips, 35 to 50 pips higher off of this move by dollar yen, especially since it's seemingly shrugging off that bad US data without really too much of a problem, which again, a little bit surprised about. Euro just kind of looks ugly here. Pound looks a little bit better. If we can get above 151.47, that should really start to accelerate pound strength. Euro Aussie made some new highs, but still not really doing much. Pound Aussie is just ugly. Yeah, that's true. Yeah, so pound yen doing kind of the same thing. If they can do the same thing at the same time, that would really help push the yen pairs higher. Though pound yen really, to me, it looks more. It looks like we still have some more room in the pound yen one. This really more looks like a horizontal sort of consolidation to me. Just look how, I mean, this is an hourly chart, but look at how, I mean, we hit 151.80, and then like 5 hours later we were at 154.75, and like 10 hours later we were at 152.25. It's just been a roller coaster on pound yen. And really all the yen pairs, but pound yen perhaps especially. I would be really hesitant to short dollar yen here. I'd be really hesitant. I mean, so we did hold that 6.8% fib, which is bearish. But the fact that, I mean, we're really shrugging off some not great U.S. news. We broke back into this wedge after breaking down. We just rallied 100 pips for really just because of bond yields. I really think that we'll see the pair go sideways for a little bit and then higher. If we manage to break back out of the wedge, I might consider shorting it, but until then, no. I have no interest in shorting dollar yen right now. even though it makes sense with what news we just got. It just doesn't seem like the reaction is strong enough to warrant a short. Aussie dollar, saw someone throw out there. Yeah, Aussie doesn't really care about the news. I bet Kiwi doesn't either. Kiwi more than I would have thought. Kiwi could be an interesting long this session if you wanted to take a little bit of a risk with it. Stop below 80, depending on how we close this candle. Aussie Kiwi keeps pushing a little bit higher. It's kind of an ominous candle forming on dollar CAD. But again, with this false break, it just makes it, for me, when these setups like play out and then are immediately negated, I'm not a fan of rejoining the trade in a couple hours later. It just doesn't usually work that well for me. It kind of ruins the pair for a while until I see a few more candles and see how it plays out. We are starting to see the dollar weaken a little bit more now. Yeah, Euro's still not that excited about it. Okay, so now it looks like equities have moved a little bit lower. Equities, though, it's tough. I mean, I wouldn't be looking. I don't know if any of you. I don't trade equity futures, but for those of you that do, really, I'd probably look to sell at this trend line, or rather buy at a break above, or sell on a break below this trend line. And I wouldn't do anything with equities in the middle here. Like so much else this week, they've been rather choppy. We spiked a little bit higher, we headed lower. The Asian market, especially the Nikkei, have been really crazy this week. It's been a tough week. Dollar yen actually really here. I mean, pretty well supported here by this 50-hour EMA. We have this trend line as well. Would not surprise me to see dollar yen go sideways for a couple more candles and then break higher. If we can get some sort of impulsive sell-off, that would be great to get back below this wedge. But until then, dollar yen looks destined to continue at least a little bit higher. Oh God! Which then does bring up these euro yen triangle. If we do manage to break above on euro yen, that actually could be a nice trade. Back to pound yen. We'll draw this different way. That's another way to draw pound yen that Nick sent me. If that is something you're looking at, I would be very cautious around 154.60. I would expect that level to be pretty good resistance. So if we get above 154, yeah, I'd be looking, and you wanted to go long, I'd be looking to get to break even around 154.60 and maybe even take some off, just in case this horizontal range, which also exists, continues to remain in force. Like that. Something like that. Any questions or requests? Pretty dull reaction. I'm a little bit surprised and disappointed about that. Any questions, any requests, any pairs that you want me to take a look at that I missed? oil. You love oil. Oil's sitting right on support right now. It's been going sideways for a while now. We're right near this recent sort of range bottom. 98 has been the major top, and 92 has been the major bottom lately, with a couple exceptions. So as closer we are to 92, the more I like it long. Closer we are to 97, 98, the more I like it short. It's been kind of a pain in the ass, though, to trade. You have to be real quick, I think, about it. Lots of rallies, then falls, then rallies, then falls, then rallies, then falls. You make a lower low here. So right now we're holding these current, lower high. We're currently holding these same lows, though, so I'm not like too worried about it. But I am somewhat biased towards longs on oil, but it's been really tough to trade. I don't trade it particularly often, but that's what I see. I see that we're closer to support than we are resistance. We've held these three low areas pretty well over the last maybe 2 days, and we could see another move higher towards 97 before then, and probably another move lower back towards 92. Any other requests? Alright, I'm going to wrap it up. Thank you guys so much for joining me. Again, slightly softer than expected data with a far more boring reaction than I would have expected. Heads up for home sales at 10, so an hour and 15 minutes. Other than that, the dollar data is done for the week, so we may not see much movement in those pairs. So just sort of be aware that may be the case. Have a great day. Good luck trading, and I will talk to you soon.